All right, traders, good afternoon. This is Christian from Tropica Trade Group, and this is your end of day as well as end of week market recap for Friday, August 2nd. And this is the second day in a row that when I look at this spreadsheet that I've got up here, where we've got just it's littered with red and dark red. So I'll talk a little bit about. I'll try to put things kind of in perspective. We did a member. I always do member Q&A sessions on Friday at just after 1 o'clock, and I try to go over some concepts that I've experienced in my career. I've now been doing this for a pretty long time. I started my career, I started as a financial advisor before the year 2000, and a company called back then, it was called Morgan Stanley Dean Witter. So, I to give you a little background, a little bit of history, but I started when, where it was right before, just as the dot-com bubble was gearing up, and back then, and really kind of what's helped me kind of shape my career and philosophy is, at a very early age, I got kind of hit with the euphoria of what was happening and the momentum of those dot-com stocks, many of which don't exist anymore because there was no profits behind those companies. And then there were stocks, and we were talking about this company earlier, but Cisco is always one of those stocks that gets talked about because that was the darling of those times, and had a massive run, and everybody fell in love with that company, and there was a lot of emotion about that company, and a lot of people never sold. And we went through the chart and we talked about how long that stock, I think, and I'm just making numbers up at this point because I don't want to go through the whole example, but that stock went up, like split adjusted as the price is now, but I think that stock went up to like around like $50, and had just a monumental climb from like single digits to $50. And then it started to decline with everything March of 2000, and it declined, and it kept going down and down and down. And we were talking about specifically, well, so I brought up the the chart. What did I do with it? Hold on one second. So that you could see exactly what I figured I'd bring it up so that you could see what I'm referring to. But there's always lessons to be learned as you in your trading and investing investment career. But this was one of them for me, where we saw this stock ascend, and it was, like I said, it was one of the darlings of that time. And I remember as the stock was going down, and I didn't know anything about technicals then, I didn't know anything about momentum, but I remember after this peak, and once we kind of even got through the year, it peaked in March of 2000, but it hung in there for a while and basically through the year, and then it broke lower. And I remember, I think I bought the stock. I was like, oh, I'm buying the stock, I'm buying it on a discount now. It's at 30, the equivalent of like around $33, and the stock was over 50. So hey, that's a pretty good buy. And and I think I may even like still have those shares somewhere in an old account that I held at that fund at the time. But the lesson learned was, don't fall in love with a company. And these things change, and they change, companies change their personality, and it evolves. And even before I started my career, I remember like being in high school or whatever and hearing about stocks like AT&T and IBM, and those were the stocks that everybody loved and had that attachment to. And oh, I'm never going to sell my IBM or AT&T because these are going to be the best companies forever. But it never stays that way, and history does not repeat, but it rhymes all the time. And you see companies one by one, we've seen over the last couple months. But obviously, if you traded even through 2020 and 2021, you saw the same thing. You saw the same thing with Tillery, and you saw the same thing with Zoom Video and Peloton, and things of that nature. But still, I think there's a lot of newer investors who didn't obviously trade through these times, but the thing is, like, the more that you get comfortable with like not falling in love with companies, I think, like, I learned my lesson back then. And when the stock fell and it went to the equivalent of $6, and and then it based, right? And people think, oh, okay, it's basing and it's coming back up, right? Well, if you even, and again, I'm not sure where, if I bought the stock here, but I remember buying it on the dip. But just remember $33 or $34. Right, now look at it. Now we're going through 2008, 2009. We're going through all the way to 2015. Finally, like, so 2017, which is about 17 years later, the stock finally came back, right? And this is one of the survivors. Many names like Nortel Networks and JDS Uniphase, and there was a bunch of other ones that that did not make it and went bankrupt. But this took about 17 years, I guess, to get back to that cost basis. So, if you held it for that long, congratulations, you got your money back. But I'm obviously joking. But the thing that people don't realize too is what's called the opportunity cost, where the opportunity cost, meaning that, okay, if you would have sold it, like, even if you would have sold the stock, and had, maybe didn't write it all the way down to the bottom, but let's say you sold it at $10, and you put it into something else, even like a SPY S&P fund, right? You would have gained so much money versus versus being stubborn and saying, I'm not selling a stock for a loss. So why do I bring this up? Well, whenever I do a Q&A, I always get there's always questions, and sometimes we find some really good stocks in the Q&A, and when I do chart sessions, and that's fun, right? Because that's what this obviously, if you're trading or investing, you're in it for a particular reason. Probably it's to make money is probably one of the reasons, but it's also, it's quite enjoyable to find companies that are acting really well and to be in trends early, and to find, super growth type companies. But these stories all end eventually, and you can't, and this is just one chart, but you could find hundreds of examples of this, where stock will go up for, you hope for more than a couple weeks, maybe a couple months, and even better, a couple years. But then you can't overstay your welcome. You can't get emotionally attached because you love the company. Eventually, something usually changes. Now, there's outliers, right? We always hear the story about, hey, if you put $1,000 into Apple 20 years ago, now it's worth a couple $100,000, or some example like that, right? So there are those outliers, right, that do stand the test of time, or do better than most. But there's an awful lot of examples like this, where once it breaks down, it never really comes back, or it comes back, in this case, 20 years later, and that's a long time to be sitting with a stock that's underwater. So that's one of the most frequent questions or frequent chart requests that I get, is when a name breaks down and people are asking me, hey, what do you think of this name? So a couple things, like, I figured before I get into the price action of this week, I thought, like, a couple things may help you. Right. Generally, I even know the story before sometimes I even bring up the chart, but it's, and this is obviously as we're progressing through earnings season. When somebody asks me about a name that reported earnings in the last couple of weeks, the first thing that goes through my mind is, did they have a good earnings quarter, or did they not? Right? Did they have issues with their guidance? Did they have to bring in their guidance? Right? So even before I look at a chart, right? So this is a little bit of fundamentals too, but it always, for the majority of time, it works out this way. Not everything is 100%, right? But I would say 80% of the time, if the stock did have a bad quarter, it's going to break down, or it's going to be dead money. So you don't have to ask someone what they think of the stock or the chart, right? That should be almost enough for you to understand that it's probably going to be dead money. Now, there's always a chance that something, like I said, there's always an outlier, and a chance that even though a bad earnings, it could recover, because a company could come out with, they could, in between the next quarter of when it reports earnings, it could come out, and it could, come out with better guidance, or they could come out with a product and say that they're doing something different. So there's always a chance that things can get better. But for the most part, if a name, did not execute well, it's it's going to be dead money for probably the next quarter, right? And the second thing too is, even like I use obviously some complicated indicators. I use value areas because, they really kind of help me with the short term, intermediate term, and they really kind of help me trade, right? Try to be and help me be a disciplined trader. But when something breaks, it's trend. And when something's in a super nice trend, it's the 20-day moving average, right? When something breaks that, it's usually a warning signal, and you have to look to see what the next line down is. The next line down is usually the 50-day moving average. And for something that's, again, this is Cisco, but you could use this on any example. This way, I'm not trying to judge anybody on any of the names that just reported earnings, but here's your situation. I mean, this is even just all I'm using here is a 50-day moving average, the 100 and the 200. But once a name is trending like this and in a strong uptrend, once it breaks the 50-day moving average, it's over, right? The game, and the expression that I was using before is, it's over, Johnny. Now your next thing to do is get out of the stock, right? And it's to watch what happens thereafter, because names can retake the 50-day moving average and resume their trend. That happens many times, but a lot of times this is what happens. It breaks down, right? And it keeps going down, and it keeps going down further and further. So that's your clue. So if you're not taking these little clues, right, you're going to have in my opinion, you're going to have a very difficult time in this game, right? And if your goal is to excel at this and be really good, then you pick up on these signals and understand that when something is trending like this, it's doing really well. And again, I and yourself, who's listening to this, if you are not an insider in the company, then you're never going to know what's going on internally at the company and whether they're excelling or whether they're not. The price action is going to tell you, because somebody who's trading the stock actually does, right? There's always people who know the story, and sometimes it is the insiders, but the price action will tell you what's going on, right? In this situation, there was plenty of stories, right? They were, Cisco was growing and growing and growing. And what happens was all of a sudden their customers who they were selling their products to up and vanished because the bubble, bursted, right? And so they could no longer really sell, what they were doing, and they lost that rapid growth that happened. But again, you don't have to know, you don't have to be on the inside of the company to learn all that. You just have to be a disciplined trader and understand when something has been trending and showing that momentum, right? And then all of a sudden it breaks the 50-day moving average. It's not going to act the same anymore, right? And so again, you could go through. I'm not going to go through all the charts because I spent 2 hours doing this earlier. But go through the chart of Kava, right? Look back at the last year of Kava, and then look what happens when it breaks the 50-day moving average. Look at ELF, right? That was another huge one. And I can go through a couple of these with you, but ANF was a huge one that many people didn't even realize how well the stock was acting. But it's the same picture over and over and over. Look at how well this this ANF was trending, right? And these are the charts that I like, right? Where it's just methodically rolling higher, rolling higher. There's no major selling going on. Every time it checks back either to the top of the value area here, or the 20-day moving average, it gets bought, right? So the takeaway from this quick part, and then I will talk about this week, but I hope like this is meant to try to help you, right? You want to find stocks that are doing this. Once a stock gets sloppy and starts breaking down, and here's the break of the 50-day moving average, right? You get out of this, right? Now, like I said, it always has a chance to retake it. And it redeemed itself, right? And it didn't, I don't even think it did it on earnings, but it broke down, right? There could be false breakdowns, that happens. So you exit here, you basically wait till it, and notice how it's the same level. You didn't miss anything, right? And then you could take advantage of this situation, right? Now it advanced, did fine. It started to get more looser up here, right? The price action wasn't like this. It got more erratic. Sometimes that's a clue too. But let's say that you kind of held into it through this erratic behavior. Now, here's the break of the 50-day moving average, right? Also, the break of the value area was also a clue over here, right? To get out of this. And now look at it, right? That's distribution. right? It's not the same stock that it was, right? It's not experiencing that growth anymore. It's changed personalities, right? And it's doing something different. I can't tell you what it is. I really can't tell. I never really shop at Abercrombie anyway, but somehow they must have been doing something correctly and executing very decently. But in retail, trends come and go. So now, perhaps they're not as popular as they were, and look at what's happened, right? And who knows, right? And again, I nor anybody else who you listen to, they don't have a crystal ball. They don't know what's going to happen, but I could tell you for sure that the stock has lost its momentum, right? And so you could move on from this, but here's another story too. Chipotle. You could go back and you could look at Chipotle, and there's many examples with the stock over the years, but it's got the same type of pattern to it. Rolling higher, comes into the 20-day moving average, it gets bought, comes into the 20-day moving average, it gets bought. These are the stocks that you want to find. And again, it doesn't matter what the valuation is. It doesn't matter, because some expensive stocks get more expensive. Some cheap stocks stay cheap for a long, long time. It has nothing to do with that. It has to do with it's doing something different, right? And there's a growth story behind it, right? And then once it breaks, it breaks. It's over, Johnny, right? In this sense, it was the 20-day moving average, because the 20-day, it respected that and the whole ascent higher. But once it breaks that, it's over, right? Or this was the 50-day moving average. Excuse me, the 20-day moving average was in here. But this is as simple as you can get, right? And again, you don't have to overcomplicate it by knowing, oh, it's a great company or what. It doesn't matter if there's two different things between being a customer of a company and thinking it's a great company versus the stock price. They are two different things. All right. So I bring this up, of course, because, I've been a shareholder in Amazon, and I'm not saying anything negative about the company in Amazon, but look at the trend, right? And this thing got a little bit sloppy here and there, right? It wasn't exactly as nice and mechanical as a couple of those charts that I just showed you, like in Abercrombie for a while. But notice the break of this 50-day moving average, right? Or this is 5, 10, 20. This is the 50-day moving average. Where's the 200-day moving average? Or maybe that is the 200-day moving average. But this looks like a character change to me, right? And it's not to say that Amazon is a bad company. It's just that you're experiencing a character change. Now, this is just one day. Maybe you watch it for a couple more days and sees what happens. But you want more examples. It's the same story over and over. CrowdStrike. Beloved CrowdStrike. Everybody loved this company, including myself, right? Huge growth, right? Methodical, moving higher. It actually exponentially got higher. Here was your first warning signal, broke the 50-day moving average. You could exit. You could get back involved when it reclaims it. Try to push higher. That was also kind of a rejection that I think a lot of people noticed. But here's your break of the 50-day moving average. Notice what happens. Then it stopped at the 200. And since then, look at it, it's fallen apart, right? So the personality has changed with this company, right? And obviously they had an incident that spurred that, but the momentum is gone, right? What brought this thing up higher and higher and higher was a story and was momentum. That is no longer there. So it doesn't matter if you think CrowdStrike is a great company, the stock has changed and it's changed personalities. Now it eventually may come back, but what's your key to get back in? Could be the 200, right? Because it can't just be your opinion, right? Because you don't know, you don't work for CrowdStrike. You're not involved. You don't see the contracts, right? So it's got to be something that's telling you that on not your gut feeling. It's going to be whether momentum comes back into the stock. And that's going to take a long time, right? And it can happen, but why mess with this down here, right? Because if you're messing with it down here, you're going to miss all those other opportunities of stocks that are trending and moving in the right direction, right? And you don't want to get bogged down and cause yourself mental stress and everything else with a stock that's breaking down, right? And part of I think too, I know everybody's always about catching every single move and doing victory laps on Twitter. But to me, victories are where you look at these things and you say, I'm not getting involved in this. And you make the right decision and you're not causing yourself number one, a monetary loss, number two, stress, and number three, you're not missing your attention span, right, is focused on this that's trending down and lost momentum and the story has changed, versus finding the next strong name out there, right? Because you're causing yourself that opportunity cost, both in something monetarily that would be better, and also the energy, right, that you're expending on this, where you could be trying to find the next stock that's acting much better. All right, so I hope that I figured I'd kind of go off on a little bit off on a tangent, because it's Friday and this was a heck of a week. But I think that you're going to find a lot of stocks coming out of this earnings cycle that are going to show you good growth stories. The earnings watch list that I've put together already has well over 50 names that have come out and had either strong earnings or a gap up. And there will be lots of stories about that. One name I'm watching next week is going to be GoDaddy, right? By the way, look at the trend in GoDaddy, right? So, okay, so if you're looking at this chart and you're like, oh, I can't buy this here, it's up too much. Well, first of all, no one knows how long a trend is going to. I don't care who you are. You don't know how long a trend is going to last, right? You just don't know. Your job is my job as a trader and a trend trader is to stick with these things for as long as they want to go, right? And then get out when the story changes. So this one is ongoing, and it's been ongoing for a while. Here was the sideways, here's your base. Here was the change in the character. Where did it come? On earnings. So again, if you thought this was, people probably said, I can't buy it up here after this type of a move. Well, that started the move. That was at 85 bucks. And here it goes, methodically moving higher, like many of the charts that I just showed you. These are the things that you want to find, right? And you want to be in. And, even though it's already made a decent move, I'll probably be in this stock, and then I'll be out when the character changes. And the other thing, like, people have the fear all the time that, I can't buy up here. It's already made such a move, right? You have to understand how methodically this stock is moving, and you have to have some confidence in yourself that once it breaks the 50-day moving average, you get out, right? And the story's over and you move on, right? And again, you do have to be a big boy, big girl to understand that to be able to get out of a trade that doesn't work and not sit with it like having, because this is what puts holes in people's portfolios, is when they go after something like this because they think it's a good buy after it's sold off. But meanwhile, it's lost all the momentum. It's lost all the institutional support. It's over, right? For now, the story is over for now. And again, it doesn't mean, and I'm not making a prediction about that. CrowdStrike could bounce, but when it bounces, most likely it's going to be met with selling pressure from all the people who've been stuck in the stock up here. So yeah, if it bounces, and this is I always get the questions too on stocks that are like this, and whether I say that I like the stock or whether I would say that if I like the stock or if I don't like the stock, people don't even think about the exit plan of, okay, if you buy this dip down here and you get a bounce, most people they're not savvy enough to take the money and put it in their pocket, and then when the stock returns and trickles back down, they're still in it, right? But in any event, I could go example over example over example, and it's interesting to do this because it's fascinating what the market does. All right, let's talk a little bit about the so I just wanted to kind of get out of this subject because it's been a pretty nasty couple of days, and that's another thing that always amazes me about the market, is that it could come at you pretty fast. I mean, this move that we've seen in this is just 2 days, of where we were kind of looking pretty decent back above the 50-day moving average. Again, you also have to have, I saw a lot of people getting really excited about this. I'm like, well, it's a Fed day. You kind of like, I know some people who are just pure. I don't like people who are just purely fundamental or purely technical. You have to have some wherewithal that, hey, this is a Fed day, right? Let's give it some time and let it set in a little bit. And if you've been experienced, then you know that sometimes the day after the Fed meeting is where things are allowed to sink in. Because I didn't, and I've said this in yesterday's video too. that wasn't a very dovish Powell. Like, for what the market was expecting and implying, he didn't deliver on what the market was expecting or implying, which was that there's definitely going to be a Fed cut in September. He said that it's a strong possibility, but he didn't hammer the point home, and the market didn't like it. And I, for one, I actually tried to short IWM on the day of the Fed meeting, and it didn't work. But I was like, there's no reason that this market should be gravitate, that small caps and regional banks are going to be the thing when it just doesn't make sense. What made sense to me was that there was a positioning problem. And that's why you saw this once the CPI came out and surprised, right? You had a massive amount of shorts cover, right? And that's really what caused. I don't think a fundamental factor changed in terms of why regional banks are going to be leading the move. But if you look at the positioning, this is the wrong thing, right? Here's the positioning of Russell futures speculators. They got massively short, right? And they had to cover, right? That's mainly what caused this move up and momentum in the small caps. But this happened for about a week. And then somebody got really mad at me on Twitter because I said, hey, for the last 3 weeks, the small caps really haven't done anything. They've kind of gone sideways, and somebody like flipped out on me on Twitter because I said something bad. And yeah, so then of course they try to break higher, which was here, and that was a rejection. And this is a massive move for the week. The small caps finished down 6.8% for the week. So it is, to me, crazy how fast, once the market decides to pivot, how quickly things could change. And that's a massive drawdown, and it basically just takes away the whole move. So here's where we are now. You still have this gap up day on the CPI date, but that's it. I mean, the whole thing has been taken out, and that's also a loss of momentum. Do I think the small caps come back? Well, you have to ask yourself, are you really bullish the regional banks? Or do you think that the regional banks are the trade that's going to power for the rest of the year? And what's your reasoning why the regional banks are going to be, right? So now everybody's talking about recession, which I don't completely buy, but you want to go, if that's the case, right? If you believe that there's going to be some type of a recession, soft landing, hard landing, do you think that the regional banks are the trade to be in? So again, you kind of have to have a little bit of logic, and you could call it maybe fundamental grasp, but no. And I missed out on this move. I didn't really participate in it because I just didn't think that the regional banks were going to be, because they are the biggest weight in the IWM. But I just didn't think that that's going to be the trade, other than a short-term squeeze, which is essentially what we got for about a week. All right, so let's move on. I had a chart up of the VIX. That was a story of the day, is that finally some fear spread into the market a little bit. Where's my chart of the VIX? Here it is. All right. So what was interesting, I found over the last couple of weeks, is once the volatility kind of changed, right, and we moved out of this range of like we were in 13 to 14 for a good like 3 or 4 months. And by the way, like I've heard all this nonsense on Twitter and so forth, and I'm sorry to bring it up, but I think it's good commentary, right? People are saying, oh, the VIX is broken, it doesn't work, it's 0-day options that are now controlling the market. This is the biggest bunch of bullshit I think I've ever heard, right? It happens from time to time that there's a low regime volatility environment. Again, you have to remember what the VIX measures. It's not fear, right? All it does, and it does a perfect job at this, is it measures the implied volatility of 30-day options in the S&P. It doesn't do, if the Qs are doing something or IWM is doing something, it doesn't account for that, because it measures S&P volatility and in 30-day options. So for a while, it just wasn't implying much volatility, and the market grinded higher. That happens over and over and over, right? Maybe not getting down to this low level is a little bit abnormal, right? But so what was interesting is once this changed, right, over the last couple of weeks, we really went breaking down. We were kind of hanging around the 16 level, right? And now you got this explosion higher in the VIX. One thing I think that's a positive is we finally have one of these candles with a long wick on them. I don't, again, I think like I've said before with this and bouts of episodes of volatility is you probably need a little bit more information than just this one day. And we'll see if we begin to kind of break back below 20. I think that would be a really good sign. And then, of course, heading back towards 15, which, again, was something that didn't sit right after the Fed meeting, was that the day after the Fed meeting, the VIX stayed around 16. It never stopped. It never really dropped off like it normally does after an event, right? Normally you get that vol crush. So these things kind of gave a little bit of, some a signal, right? And I will tune and I talk much more about the VIX when it's important to talk about this. This is the volatility of the VIX. This is the VVIX. Same thing, pretty big candle for the day. Good thing is we closed way off the highs. So what will we get for Monday? Well, we'll probably get two different things that could happen. Now, again, you probably heard this before, but I'm going to say it again, is that markets usually don't bottom on a Friday after we've had a volatility episode like that. So what could happen on Monday? Well, obviously, we've gotten some weaker economics this week. Is it really bad economics? No, I don't think so. But yes, it's a little bit weaker economics, right? And going back to the ISM, which again is a leading indicator, which we got the other day. Yes, manufacturing's dropping off, but we're not really a manufacturing country. What's going to be more important is this number on Monday, comes out a half hour after the open, which is the ISM services, right? They're looking for 51. Anything after 50 is expansionary. So why again is this number more important than GDP? Because GDP tells you what happened months ago. It's a lagging indicator. You could Google this, leading versus lagging indicators. ISM is a leading indicator. That's why it's more important, because it's telling you a little bit still in the past, but it's more of a leading indicator, right? So we'll see if this number comes in around 50, 51, 52. The market's probably going to rebound, right? Because it goes away from the hard landing situation to more of a soft landing. But we'll see. I, for one, hope that the market opens up lower on Monday morning, and then we could possibly rebound. If we get another one of these gap ups, you're inviting people to come in and sell that gap up. So I think that will be very interesting come Monday morning. But do I think that I mentioned that I hope we open up lower. I don't think we're going to open up again down 2 or 3%, but I wouldn't be surprised if we open up down like a 0.5% or something like that, because I think that this was a pretty extreme move that we saw today. And I don't think it really warrants the data that wasn't all that bad. Again, it's weak, but it's not like the economy is dragging to a halt. The other thing that you have to remember too is this is quite normal for the month of August. August is notoriously one of the weakest seasonal months of the year. So this is coming right on time. So for now, this seems like a garden variety type pullback. I understand why IWM giving back those gains. It didn't make sense to me why it went up in the first place. Other than the positioning was really bad. We will have to retake some levels. Here's what the SPY chart looks like. Here's what the S&P futures, which did take out a lower VPOC. Notice what happened the last time this got taken out. We had a rebound. Not right that second, but we did kind of grind higher after that virgin point of control was taken back. Also note we were below the 50-day moving average before, and it took some time back in April to recoup it. You had a rebound, you had a little bit of a check back, and then you got going. So it will probably take some time. You have to be patient. You have to realize that August and September are crappy months, and but if you get through them, right, we might still have a really nice end of the rest of the year. Possibly, right? And we'll take it day by day. So if there's anything else, I wanted to bring up the rest of the performance for the week so that you could see that. But amazing that all that performance happened just in 2 days, right? With the Qs down 3.1%. Very much defensive areas of the market like utilities, interest rate sensitive areas did well, and then of course a lot more red to the downside. I don't believe I've gone all the way through this video, and I haven't talked about bonds. But yes, that's a heck of a move. The 80 bullish 80% rule is in effect. And that's one really, look at the volume on this move higher. And again, it's not just TLT, which is the longer dated bonds, but look at IEF. I actually like this chart better. This is 7 to 10 year, right? So they've been making bonds, have been making gains across the curve very nicely. Here's another one, which is IEI. Right, and this is 3 to 7 years, right? That's actually the biggest breakout of all three is the shortest maturity, right? And we went over all these charts yesterday in the member webinar, and we talked about how we like them very much. So the last thing I'll talk about is credit spreads, right? Look at the move in high yield credit spreads, right? So you've got a major widening finally happening, and that's just attributable to what has transpired in terms of the treasury market. High yield bonds, I don't think are doing, they're probably following SPY a little bit here. Right, they don't look that bad on the daily chart, but they're going down and treasuries are going up, right? Flight to safety, and that is causing those credit spreads to really widen out. So I wanted to bring that to your attention because it is a change in tone, and we'll see how it goes for next week. There it is. All right, guys. Yeah, so hang in there. And overall, like I said, I'm actually like, besides obviously this last batch of earnings with Amazon and Google and so forth, but outside of those companies, we've had some really good earnings reports. But you've got to let the dust settle. You got to let volatility come in a little bit. And I think that there will be some really good setups and charts that I kind of went over in the beginning of this video, that might be some nice growth candidates. And really, that's what you should be thinking about as we progress through earnings season. And the volatility is not to be focusing on the names that missed their earnings reports and trying to buy the dips in names that should be down because they didn't do well. You should be focused, in my opinion. Again, everything in this video is for information purposes only. I'm not giving any advice, telling anybody what to do, right? You could read that full risk disclaimer right here, just so that you understand where I'm coming from. But I'm just trying to show you what I've known. What helps is you go after the names that are executing really well and will be the next growth stories for the next 3 months. You just have to get over, again, investors don't like to buy things after they go up, but a lot of these companies will have change in personalities. Like, if you don't think that this stock has changed its personality since it had earnings, this is a name that had strong earnings reports time and time again, but something changed here, right? And if you're like, oh, I can't buy it because it went up this day, this is when the stock was at 437. The stock, it has to be what often happens is it gets accumulated by institutions who are not in the stock and are like, geez, Lockheed Martin really did something special. Something's changing with this company. So it's a different story now. And investors bought the gap up, 490. The stock has gone up to 550. Right. So that's another thing that I think really traders will, younger traders need to overcome. They think that they missed the move when really the move is just beginning to start. All right, guys, have a great weekend. Thanks for watching the video. If you like what I went over here, please like and subscribe to the YouTube channel. Thanks, everybody. Have a great weekend.